Hello students, this is a tutorial for completing the 1120 tax return, which is for C corporations. This tutorial will apply for students taking 233 and 334. There will be times during the tutorial when I'll explain the differences between the two, primarily when it comes to completing the book tax reconciliation on page 5 of the 1120 or the Schedule M3. So you can see here I've pulled up an 1120. This is just from the IRS website. You can see the URL up here. I went to irs.gov and searched for an 1120. You do want to be sure you get just an 1120, not an 1120S, which is for S corporations. It looks a lot different, or any other kind of specialty 1120. So you just want the straight up 1120, which probably is the first thing that pops up when you're doing a search anyway. I have pulled up a problem here. Let me flip towards the top. Here's some information in a problem, and this is what your information will look like when you get your assignment. So you'll see a check figure for taxable income, and then you'll have a lot of information so that you can fill out the tax return. I'm going to scroll down here for a second and show you that there's an income statement, and there is either a balance sheet provided, or in this case what I've done is used a balance sheet from the book, and just rather than taking the time to retype everything into this Word document, I had told students here to look on a certain page of their textbook, etc. So that's why there's no balance sheet specifically in this problem as you see it. But that's okay. That shouldn't be too confusing. So the first page of an 1120 here is made up of basic information about the taxpayer at the top, which is similar to what we put at the top of a 1040. And then we have an income section and a deduction section. And when we get to the bottom of page 1, we actually have taxable income. There are 5 pages to the 1120, but a lot of the information and a lot of the points for your tax return problem show up here on page 1. And the nice thing is there's a check figure. So you should be able to have quite a bit of confidence that you have earned a lot of the points, probably about half of them, for the problem, for the project, if you hit the taxable income number. One thing to always check for is whether that taxable income number is for line 28 or line 30. Let me see what this says. I actually didn't specify in this problem, so that's something you might want to ask me about if it doesn't look like it's specifically provided to you in the problem. Okay, I don't want to get too far ahead of myself though. So in this problem, we would start by putting the name of the company, the address, the EIN, which is similar to a social security number for an individual, the day it was incorporated, and the total assets, which will come from the balance sheet. One thing to keep in mind, the balance sheet numbers aren't going to change from the balance sheet and the financial statements to the tax return. We don't have a different set of numbers for the tax return when it comes to our assets, liabilities, and equity. What does change is the way that we report some of the income and expenses for financial reporting purposes versus tax reporting purposes. So the income statement numbers might be adjusted, but the balance sheet is going to look exactly the same. I mean, the numbers aren't going to be adjusted for anything for tax purposes. So this total assets number would just come from the balance sheet, and here we show total assets at the end of the year was $9.8 million. Now if you're taking this listening to this tutorial as a 334 student, keep in mind your total assets will exceed $10 million because you are going to be completing a Schedule M3 for the book tax reconciliation. And the difference between having to do a Schedule M1 or a Schedule M3 is predominantly driven by total assets exceeding $10 million. So just a heads up. Your problem will have more than $10 million of total assets at the end of the year. So in this problem we have Dawson Inc. It was formed on November 17th, 2001, and we have their address and some things up here. This is just the basic information you need in order to be able to fill out this. Okay, not tricky. So one thing I want to mention is sometimes students think, oh, I see these options, I need to check one of them, and that is not necessarily true. So it says check if, not check one of these. So most of the time you won't have to check anything in a lot of these boxes. Keep in mind that in the real world there's a lot more complexity when you're dealing with really large companies, and we aren't going to deal with all of the complexity of some of the items that are on the 1120. So for example, if you're listening to this tutorial and you're taking 233, you're not going to check any of these boxes here. If you are taking 334, you're going to mark that you're attaching a Schedule M3. This isn't the first year. This company was incorporated in 2001, so it's not an initial return. There's no indication that the company's no longer going to exist, so it's not a final return. It didn't change its name or its address. So you're not checking anything here, and again, there will be many times where you don't check a box or something isn't necessarily relevant for what we're working through. So a lot of the points are going to come here on page 1, and the income items are going to show up here, deductions are going to come down here. So what I'd encourage you to do, because you have a check figure, is look at your income statement, and you'll notice your net income per books does not hit that check figure that was provided on page 1. And that's because, again, the way we account for income and expenses sometimes is different for tax than it is for book. So what I encourage students to do is to walk through the different accounts that you see here and put a little asterisk or a check mark or something by accounts that could have a book tax difference. So for example, we haven't seen in any of our examples a book tax difference for gross sales or sales returns and allowances or cost of goods sold. So you basically are just going to drop these numbers that you see on the income statement directly onto the 1120. Gross receipts, returns and allowances, cost of goods sold, etc. Dividends, we will have a dividends received deduction, but you do put the entire amount of dividends here, and you'll also put it here on Schedule C. Sometimes students ask me, how do I know if I'm supposed to attach a schedule or a form? Well, if you have a number on a line that says attach something, you should attach it. So if you have a cost of goods sold, then you're going to be attaching Form 1125A. If you have dividends, you're going to have Schedule C, which is just on page 2 of the 1120. If you have any capital gains, anything reported on 4797, you might have some things down here as well. Okay. So I'd encourage you to go through and put a check mark by anything that you think could have a book tax difference. It doesn't necessarily mean there will be one, but if there's an account where there possibly could be a book tax difference, then I'd put a check mark by it. And then what you want to do is you want to not put the information directly from the income statement onto your 1120, because if you did that, when you get down to taxable income, you aren't going to hit the check figure I provided you. You're going to hit this number, which is not the same thing. So you can't just take these numbers and then put them on page 1. That's not going to give you the right answer. What you have to do is adjust them. So let's walk through one of the adjustments. We know that interest income from state and municipal bonds is not taxed. Therefore, this $6,000 here that's showing up on the income statement should not show up on the 1120. The 1120 is showing the income that is taxed and the deductions that are deductible for tax purposes. So this $6,000 is not going to be reported on interest income as interest income on the 1120. CDs, this is just money that's in the bank. It's totally taxable. So this $36,500 should show up as interest income on the 1120. So let's pop back over here to the 1120, and we see here line 5. Again, you want to only put that $36,500 here. You do not want to put $42,500, because if you do, you are including interest on this line that is tax exempt. Okay, so you're going to do the same thing for each of the items on here that could have a book tax difference. Another example would be depreciation. We know almost always there is a difference between book and tax. So you don't necessarily want to put the book depreciation number on page 1 here on line 20. You want to put the tax depreciation number, which is provided to you up here in this additional information. It says that the Depreciation for tax purposes is actually $925,000. So that's the amount you would want to put here on line 20. It's $925,000, okay? So if you have made all of the adjustments to take book income and book expenses and turn them into tax income and tax expenses, you should be able to hit the check figure that is provided to you, and you should feel very confident that page 1 is done correctly. One exception to the rule where I'd said if it says attached such and such form or such and such schedule, one exception is the depreciation schedule. You will not complete a 4562. It is a very detailed, long, painful form, and you simply don't have all the information you need in order to complete that form, so you won't be attaching that. I think that's what I want to talk about here on page 1. So let's go on to page 2. Page 2 is where you report your dividends and special deductions. This is a place where you're going to see there are several lines here, 20 lines, and you are not going to have something on every line. In this problem, we do have some dividends. Let me come back down here. See, we had dividends of $18,000. And the additional information said that the dividends were from Hager Corporation, which was a less than 20% owned domestic corporation. So we know we're getting a dividends received deduction. We know it's 70% because it's a less than 20% owned domestic corporation. And so we are going to, let me be sure I have my numbers here. Okay, so $18,000 is the amount of dividends. So if we pop back over here to page 2 of the 1120, we have dividends from less than 20% owned domestic corporations. Okay, that's exactly what we just read. We would put the $18,000 in here, and then the schedule tells us take that times 70%. And that is going to give us the amount of our deduction. If you look down at these other lines, dividends from 20% or more, dividends on debt finance stock, blah, 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 we don't have any of this other stuff. So we skip lines 2 through 8, and we get to line 9, which just says add lines 1 through 8 and put that over here. Again, we don't have any of the special stuff, dividends from foreign corporations or a foreign dividend gross up or anything like that. It's beyond the scope of our class. And so you actually will have nothing on these lines. So you get down here, says add lines 1 through 17, and then put this also on page 1, line 4. And then down here says add whatever lines and put here on line 29B on page 1. So what happens on page 1 is our dividends show up here, and then our special deductions, including our dividends received deduction, comes out down here. Okay, that's it on page 2. Page 3 is your tax computation. I think you can complete this information. We get some additional information down here, and again, this is provided to you in the problem, things like what accounting method they use, the business activity code, etc. When in doubt, if you are unsure if something applies, assume that it does not, because again, it's probably just beyond the scope of the class. But you do want to try to answer these questions, and you do want to read through them, and it's possible that there are times when there will be an answer that you do say yes to, and then you have a little schedule you have to attach. All right, so I'm going to stop here for now, and then I will come back to page 5 and the Schedule M3, because that's really the other main section of the tax return.